Hello and welcome back to Bunnex Investment Group. In this video, we are going to talk about an M15 strategy that can flip your trading account. This is for those who want to as well trade the challenge accounts on prop firms as well as grow their own personal trading accounts. Alright, so basically imagine catching market daily tops and bottoms before most traders even see them coming. We are basically going to try to catch the highs and lows of mostly the London session. It is a common setup and probably you could have tried, but you did not have these secrets that I'm going to give you. And many look down upon it, but it definitely works. So in this video, I'll provide you the rules on how to use it to trade it as well as to spot that particular trading setup. Alright, so basically the pattern looks like this itself as well as its variation. So in this particular case, this is Asia, and if this is Asia, after Asian session we expect to get into the London session. So what we want to do is to get the long sustained runs of the London session, whereby we have spotted such kind of a pattern, an M pattern, and the inverse is true. This M pattern is actually above the Asian session, and this M pattern is actually within the range. But if we look at this particular cases, you'd find out that it's more of subjective than objective. And what we want to do is to have subjective concepts. So from the picture above, we have seen that the pattern of interest is an M or W pattern. If it occurs on the bottom side, we are actually looking to long. So the pattern can either be above Asian session range or in line with the Asian session range, like what I've showed you. However, this can be subjective, therefore we need some EMAs to make the system objective. Below are the rules of spotting the pattern. Right, so firstly we need to have the 50 and the 200 EMA. These are my go-to EMAs. You all know on this particular channel I talk of these particular EMAs on most of the strategies that actually work that I share on this channel. Price retraces back to the 200 after the 50 and the 200 EMA have crossed. So whenever the two have crossed, we need to see price retracing to the 200 EMA. After that, we need to look for an M pattern that is for shorts or a W pattern for longs on that particular level. But wait a minute, I need to show you something before you skip to the next part. All right, so basically the entries, stops and targets are these ones that I have summarized. Entry is after second leg of an M or W confirms, stop above or below the pattern, and target 2 or to 3 times the risk, that is 2R or 3R on that particular trade, or any major support and resistance, which is basically a demand or a supply zone that you are seeing. But let's now have examples so that you fully understand and grasp this particular concept practically. But before we do so, check out our emotionless consistent EA called the Stophunter Pro EA. You'd find out that a lot of traders are not losing because they do not know how to trade. They are losing because they have emotions that takes over whenever they get a loss. And this robot actually took a deposit of 1,000 to 500k in 5 years of testing. I have left the link in the description. If you want one copy, it's going for $249 lifetime payment. Alright, so this is euro against Canadian dollar, and on this particular pair we are going to use the same EMAs that I've shown you on the slides. So the 50 is the one in blue, the 200 the one in white. Those are the EMAs that are important for now. We can see that after their crossover, which was actually at this particular point, we had the Asian session, and the Asian session actually covered this from start right to this particular point, and then we can see a retracement of the market to the 200 EMA, giving us a pattern, a W pattern, and the market went to the upside. This may have been difficult to see if you do not have a trained eye, and you could have skipped it, but let's actually look for more examples so that we can actually see clearly. This is another crossover of the 200 5200 EMA, and after that crossover we can see that we had this particular Asian session, and after that Asian session, what can we see? We can see a beautiful W pattern, first leg, second leg. You can as well add the TDI confirmation, whereby the first leg will be outside the bands and the second leg will be inside the bands. After that, you can as well see another W pattern, but this one had its first leg in the London, therefore it was not valid. So basically, that is what you'll be doing over several number of pairs. And this strategy doesn't mean you are not going to lose. You are definitely going to find losers, but always understand that the winners should actually run and the losers must not exceed the winners. That's basically the secret to making it in trading. On that note, we've come to the end of our today's video. Thank you for watching. Like and subscribe, and I'll see you in the next one.